Atlantis Coin Market is an exclusive access crypto marketplace powered by SXRN, an AI auto trading algorithm, and uses the EARN token as its reserve currency. ACM provides digital asset yielding and liquidity servicing to quality blockchain-based projects at zero cost. ACM services are designed to increase exposure, circulation, and utility of your favorite digital assets. ACM is part of a group of protocols that help power the City of Atlantis ecosystem project. COA, City of Atlantis, is a virtual real city of industry that tokenizes real-world assets in multiple sectors including natural resources, real estate, digital entertainment, and consumer products. For more information, join their TG at Atlantis Coin Market.
All right, welcome to Rugs and Riches. AG can't be with us because he has a real 9-to-5 job where he can't just stop for an hour and do a recording.
We got a better looking face tonight. Don't worry. Or this afternoon, depending on where you're at in the world.
Yeah, we need to get Stu to get really big though, like AG does. AG's head takes up the whole, I think that's his ego, right? There you go. There you go. Well, today we have Crypto Stu with us. I know a lot of the Elephant folks know Stu. He's the mastermind behind the calendar that gets us all hyped up about futures. Stu, what have you been doing the last few months?
Well, man, I've been super busy. I was finishing up with my real world job, and I recently just started with Flex Labs full time, and so it's been a really exciting period for me, but pretty stressful at the same time because I had so much work to try and wrap up before moving on to this new venture, and I wanted to leave the existing company that I was with on good terms, so working a notice period and at the same time trying to get up to speed with everything that's happening with Flex. And so I found I was doing about 4 different jobs at the same time. And so there just wasn't enough hours in the day. So I have to say that I'm really pleased that that is now behind me and I can, 100% put my focus into helping build Flex moving forward.
Well, congratulations, full-time crypto, jumping into the industry. That makes 2 of us on the call. So Goldwyn, you got to catch up. All right, you're next up to bat. But that's really exciting.
I mean, does the McDonald's job count?
Yeah, it does if you funnel all that money into crypto, which is my intention. So yeah, if you guys haven't heard, I'm soon to be employed by one of the biggest employers in the United States, known as McDonald's. So yeah, I'd catch it on the Zero to Crypto Millionaire. And hey, maybe the first paycheck I'll have a few bucks to maybe invest in Flex. So we'll see that on the challenge.
Nice.
Yeah. So Zach, have you ever, like Stu was mentioning, he was trying to run about 4 jobs at a time. Have you ever done that where you were kind of starting a new job but finishing one? The reason I ask is I have an interesting story about one time I did that. Go ahead.
I've always done little things here and there. Like I teach martial arts part-time as well. So I count that kind of as a continuous job. When it comes to like having a full-time job, I've never really tried to balance 2 of those at once. Usually I try to focus on one. But what's your story you got here about multiple jobs?
Well, when I was, I think 19 years old, which was a long time ago, but I was ending one full-time job. I was starting a second full-time job, but I had a part-time job. So my part-time job, I was the Easter Bunny at the mall. So where they come and they take pictures with the Easter Bunny. That was me.
Nice.
So, and it was so stressful because like I was working 2 full-time jobs and that part-time job for a week. Well, when it came time for taxes, I got my Easter Bunny check and they didn't take any taxes out of it. And so I think I made like $180 for being the Easter Bunny for a week at the mall. Which, I mean, that was, let's see, that would have been like 95. So that was actually kind of good money back then. But that 180 bumped me to the next tax bracket when I had to do my taxes. And I lost more than $180 because I was the Easter Bunny. So where it helped me that 1 week that I got that extra money, it actually cost me. I think I figured it out. It was like $75. It cost me to kill myself for 1 whole week.
Wow, that's funny as heck.
Taxman always wants his cut.
Man, so that's, for all you youngsters that are just getting into the workplace, it kind of pays to watch those tax brackets. So when your boss is like, congratulations, you got a raise. Well, if that raise bumps you to the next tax bracket, you're actually losing money net for the year. So
and the moral of the story is you got to be Santa Claus. Don't go for Easter Bunny. You got to be Santa Claus at the mall.
Listen, it's funny. Do you know how the background checks you have to go through to be Santa Claus? Because I sort of looked into that when I
would
was
hope
Easter
so.
Bunny.
I would hope so.
Right? Because Santa Claus actually talks to the kids, where the Easter Bunny you didn't. We were in a rabbit suit. But it was kind of funny because you had me, who I'm a bigger guy, right, being the Easter Bunny. Well, there was a girl, I swear, she was like 5'1", maybe 100 pounds. So you have them leading me out as Easter Bunny and then bringing her back in as Easter Bunny. It was like, I'm sure some of the parents were like, what the hell just happened? Like, it was pretty funny, but
that's funny.
Fun times.
Nice.
But the star of the show today, Mr. Stu, he's here to tell us about Flex. And is it Flex Labs? Is that the full name of the project? Or could you give us some background on what Flex is?
Yeah, so Flex Labs is kind of the parent company, if you like, and Flex Perpetuals is a specific project that we are launching under that Flex Labs banner, if you like. Mm-hmm. So Flex Perpetuals is just one of what will be many endeavors in the space, and including things like education, tools and software that can help users in the DeFi space. We've also got an existing project called Flex IRA, which has been running now for the past 14 months. And then Flex Perpetuals, which is really what we're talking about in this evening's call, is the perp DEX that we're launching on base chain. So we've got big plans as an organization to really make a name for ourselves in this space. And it's really exciting, super exciting times for us.
That's awesome. So Flex Perpetuals, you mentioned they're launching on base chain. So is this going to be the initial chain launch? Is this where the focus is, given that base is kind of the up and coming contender for when it comes to the multi-chain world of crypto? It seems base has a lot of untapped potential when it comes to just new projects launching and DeFi primitives that maybe have not been launched on other chains, right? There seems like there's a lot of fertile ground, so to speak, on base chain. Is that kind of what the intention was for?
That was kind of when we were going through, doing some research on where we wanted to launch this project. We threw around quite a few different ideas. We even considered going non-EVM, going on to one of the new like SUI or Injective. But we decided that, and at the same time as we were doing this research, base just all of a sudden started blowing up. And you could see the TVL was just moving from other chains onto base, and we thought to ourselves, this is the place that we want to be. The gas is cheap. It's got Coinbase behind it, so you've got that industry titan that is supporting the base chain and promoting the base chain, and they're making waves in terms of trying to onboard and increase adoption in the space by developing their wallets that are going to make onboarding much simpler, make the user interface much more simpler for the general investor out there who perhaps isn't interested in getting into doing the DeFi deep dives, but also wants to take part in the opportunity that this space brings. So base chain was a bit of a no-brainer really for us once we started to see the flow of the TVL moving into it.
Hey Chris, I got the Flex kind of little white paper here or informational paper. Can you share my screen so I can put up on screen for everybody?
Yeah, 1 second. I do. I see it. I can bring that up. Stu,
Right.
you guys don't have any concerns with because of Coinbase ongoing stuff with like the SEC or being based out of the US? You know, do you guys have contingency plans in case you guys just can you hop chains easily or?
It's always a consideration, isn't it? The regulators and how they're going to impact the space, and it was a consideration for us when we decided to go on to base chain. But essentially, the code will be, we could move on to another chain without too much difficulty. We're going to keep that in mind when we think about launching our liquidity, and just how we're going to do that so that we have a little bit of flexibility and being able to pivot and adapt if we need to. But ultimately, I think that Coinbase is going to come out on top. With the SEC coming after them again. I think I saw it on Watcher Guru that they've been served another Wells notice, have they?
Yeah.
And I think they're going to win long term, and this is the last gasp from the SEC and the current administration to try and do as much damage as they can before they're out.
Yeah, I personally think that Coinbase is going to be here. It's kind of like Binance. I don't want to say they're too big to fail, but I think they're big enough to where they can push back. Ripple fought them and won. Binance fought them and won. Now it's Coinbase, and when Coinbase wins, that's kind of like you said, it is the last gasp. I personally don't think that the base is I don't think that that's a factor. I was just wondering that I know some people are like, oh gosh, base is, tied with Coinbase. What happens if it fails? Well, that's.
I think, if you're the custodian for Larry Fink's Bitcoin, I think you're probably in a pretty strong position.
That's right, Mr. Fink.
There's our old fan, Mr. Fink.
He's gonna be on the show one day. That's our goal. Get Mr. Fink.
That's when we know we made it right there, right?
We can ask him to tell us about Bitcoin, this new emerging asset class called cryptocurrency. But could you tell us a little bit about here? Who's Flex for? I see here it's mentioning for traders and for liquidity providers. Can you tell us about that?
Yeah, so there are two main users of our perpetuals exchange. So traders, those that want to come in and they want to leverage trade, and they want to do that on a decentralized platform rather than trading, doing their leverage trading on something like Binance or MEXC or one of the centralized platforms. And so the PerpDex technology allows people to trade with leverage in a decentralized environment. So they still have custody of their assets. And then the second user are the people who provide the liquidity to really facilitate those trades happening. So you've got active traders, whether they be day traders or longer term traders that want to access that leverage, and then you've got perhaps more passive investors in the platform who are there providing liquidity, and they're looking for passive income for putting their funds to work in the platform.
Nice. Yeah. I'm someone who really enjoys, providing liquidity, especially like something like a project like this. I definitely am interested in like potentially being a LP for a Flex. It's a great way that you can hold your assets and then, like you're saying, potentially make some pretty high yield compared to other protocols.
I'm in the same boat as you, Zach. So I'm not a trader myself. Our CEO, Bill, he is a big time trader. He's extremely good trader. Has put over $1 billion of volume through trading platforms in the last 6 to 8 months, and wow. He is a beast. I've been sharing some of his trades on X recently as part of our kind of competitions and giveaways, and you'll just see how picture perfect his entries are on these trades. It's something to behold. But like you, I'm personally more interested in the LP side of things, and putting up my assets in order to earn yield from that, and ultimately just kind of gradually grow my bag in the space.
Mm-hmm. Yeah, that's really exciting. You have both kind of crypto investors, offering both of those two sides for opportunities there. Can you tell us a little bit more right here? Is there going to be some sort of mobile app, or is this just a little picture here?
So it's an optimized. It's a website that's optimized for mobile use. It isn't
Mhm.
going to be an app that you would download from the App Store. It's a progressive web app is the technical term for it. But it'll have all the same functionality as if you were to go onto like a sex app. So if you were to go into Mexi's app or Binance's app, it's going to behave very similarly to that, and you'll have like a PIN code that you can use to log into it, for security, and it makes it a pretty seamless experience trading from mobile.
That's exciting. That's always, like we were mentioning earlier, the easier the user access and user interface is, it just means adoption is higher and it makes the experience so much better, opposed
Yeah.
to trying to, have to have all these steps or have a strange kind of unintuitive interface. So that's exciting. I really like to hear that.
Yeah, and
Totally.
that's actually what made Coinbase so popular so quickly, is that it was super easy to onboard. Your fees were ridiculous once you started realizing how much they were
Yeah.
charging you. So,
That's right.
but to just onboard just straight money was super duper easy for sure.
Yeah, and people pay for that, are generally happy to pay for that convenience,
Yep.
making it easy.
Yes, 100%. So can you tell us a little bit about this FLP, and maybe some of the other tokens as I scroll down the little informational chart?
Yeah, absolutely. So, I mean, I think that first of all, it's probably good to explain, the difference between a perp dex, or a decentralized exchange that allows you to trade perpetual futures, which is what we're going to be launching, versus a traditional um, decentralized exchange like PancakeSwap or Uniswap. So, obviously, if you go in and use Uniswap, you've got liquidity pools, and that's what facilitates the swapping of your tokens. So you're putting one asset into the pool while taking the other out, etc. And that follows the model, the Uniswap, either V2 or V3 models. And you're going to find that that's pretty universal across different decentralized exchanges. They may call it something different, but it's following the same logic, essentially, or the same math, if you like. And then what we're doing is allowing people to apply leverage to their trades. And so the way that that works is we have what's called the FLP, or the Flex Liquidity Pool. And what people will do is, users like you or I will deposit an asset of some description. It could be USDC, it could be BTC, it could be ETH. And in return for depositing that asset, we will get the FLP token. And the FLP token, the underlying assets that FLP token represents, is BTC, ETH, and USDC. So when you deposit your assets into the FLP, you're actually holding the underlying assets, which is BTC, ETH, and USDC. And that liquidity is what's used to facilitate the leveraged trades. And that liquidity pool basically counter trades what the traders are doing. So if a trader goes long and they win, then that the FLP is responsible for paying that trader out.
Hmm.
If the trader loses the trade, then the FLP benefits from that. So you've got this USDC, Bitcoin, and Ethereum underlying assets, and then you've got, on top of that, you've got this counterparty, counter trade environment where the FLP is taking counter trades to what the traders are doing, and that's essentially how it works. And so, as in return for you depositing your assets, you receive a share of the revenue that the protocol makes, and the protocol makes revenue through the fees that the traders pay to place their trades. So they'll have a trading fee, they'll have a borrowing fee, and if they get liquidated, if they use too much leverage or the market moves against them, they'll get liquidated, and that again benefits the revenue of the protocol, and then that revenue is distributed amongst the holders of the various different tokens within the ecosystem.
Yeah, just let us know when your CEO's trading so we can not be
yeah, we can stay well clear. So just on that note, I think that Bill will absolutely be aiming to put some volume through our platform in the early days, just as we're building momentum, because these platforms, volume is key. We want it as much trading volume as we can in the early days, and that's going to get more eyes on the project and ultimately help our long-term growth.
Well, and even if traders are winning, they're still paying fees. So
yeah, they're still paying fees, and you will see that traders will have periods where they do well against the market, and then you're going to have periods where they don't do particularly well against the market, and over the long term it kind of balances out, and there's very little long-term risk as a result of the slide that you're on at the moment, Zach, with the risk management strategies. These are put in place to make sure that LP remains healthy and it's not jeopardized by successful traders getting their wins being too successful.
Well, and with that same token, just because one trader is successful doesn't mean they're all successful. So you would need, it's trading because one person's winning, but one person's losing too. It's not everybody's not winning. That's for sure.
Yeah, exactly.
Yeah, that was just tongue in cheek. Yeah, I'm aware of how the dynamics go. So yeah, that is definitely, like you mentioned, that when it comes to the long tail, it's oftentimes a very profitable position to be in when people are trying to trade against the market. So yeah, can you tell me a little bit more about the ecosystem and how each of these tokens kind of play together to make Flex happen?
Yeah, so it's on the surface of things, it probably looks quite complex. There's 5 tokens there within the ecosystem, but really, it's underneath it all. It's actually very simple, and I'll try and make the explanations for these tokens as straightforward as possible. So FDX is the main token in the ecosystem. This is the main revenue share, the governance token, and that's really underpinning the whole ecosystem. And that will be what our main FDX ETH LP consists of. That FDX token.
Is
the
that
FLP?
FDX, is that what people will buy in for the seed round? They'll be buying FDX.
So essentially that's what you're going to get. So when you deposit in the seed round, eventually you'll be getting FDX. In the interim, though, you're going to get another token that isn't mentioned here. It's called LFDX, and that's because it's locked. But it's another token because it will be staked for you. Because during the seed round, while you're going through that cliff period and the vesting period, and we can discuss the details of that, as we go down the pitch deck, you're actually still earning yield on your tokens, gotcha, even though you don't have access to them, during that vesting period. So, sorry, but yeah, ultimately,
I didn't mean to take us down a rabbit hole.
No, all good. I have a tendency to go down rabbit holes, so just pull me back quickly. So FDX we've covered. FLP I've explained as well. That's just our market making liquidity pool. ESFDX is an ascribed version of the FDX token, and this has been designed. So this is you can't trade the ESFDX token. You can't buy it or sell it. It's earned through staking in the various different LPs that we've got within the protocol, and it's been done that way to limit the amount of circulating supply that is in existence at any time. The FP is essentially it's a points system. So the longer that you're staked within the protocol, the more flex points you receive, and that boosts the amount of revenue that you're going to get as part of being in that LP. And if you leave, if you unstake your LPs, you're going to lose those flex points, and then you would need to start again if you were to go back in. So those FP are burned anytime you unstake. And the FTC is flex trade credits, and this is simply an incentive for traders. So when they trade, when they reach certain volume milestones, they'll receive FTC credits. And again, that just they will get an airdrop, a weekly airdrop of these ESFDX tokens, and that's to incentivize trading volume on the platform as well.
Awesome. That's pretty cool. So that's cool. Like, so really, like you mentioned, the real main, FDX token is really the governance token and the main token for the protocol, while the FLP is the liquidity provider token, and then these are kind of like rewards. You mentioned.
Absolutely, yeah.
Gotcha. Cool. Just going down here, like you mentioned, right now the protocol is getting ready to launch. Is that right?
Yeah.
And right now is kind of the before period, as word is getting around and letting people know what's coming. That's pretty cool. Aerodrome launch. So this is going to be the LP officially for the FDX token. Is that correct?
Yeah, so we're going to be our LP is going to be hosted on Aerodrome Finance. And if you're familiar with Aerodrome Finance, so they're currently the largest DEX on base chain. And they themselves are a fork of Velodrome, which is on the Optimism network. And Aerodrome works through locked or vested and escrowed voting escrowed Aero, I should say, that allows people to vote for specific LPs, and you can bribe people to vote for your LPs. And so that is actually a big part of our strategy, is that we're going to be directing some of our revenue into bribing on Aerodrome to create more awareness of our FDX ETH LP, and it gives people another option of where they can stake their FDX ETH LP. So they'll have two options. They can either stake it on Aerodrome and earn Aerodrome rewards, Aero rewards that are incentivized by us, or they can stake it on our platform and receive a portion of protocol revenue. So the theory behind that is we are able to, we're dividing the liquidity between two different staking solutions, which means that the fee APRs are going to be higher on each because there's going to be less liquidity in each, if that makes sense.
Yeah, that makes sense. I like it. Pretty sweet. Can you tell me a little bit about HMX? I noticed this is as you mentioned, Flex isn't just a, one-off project. This has a team that has experience and previous successful projects. Can you tell me a little bit about HMX?
So HMX isn't part of Flex Labs. HMX is an existing perp DEX on Arbitrum. And we are partnering with HMX, and that partnership is what's allowing us to bring their technology onto base chain. So we're bringing their working product that has been running on Arbitrum now for the last over a year now, and we're bringing that onto base chain as a result of this partnership that we have gone into with them. And we've done that for a number of reasons. HMX is, we feel it's got some of the best tech in the PerpDex environment. It was built on very similar principles to GMX, which is the biggest of the PerpDexes. And as part of the partnership, we get full support from the HMX team. We get full access to their code base. We get access to future innovations that they develop in their ecosystem that we'll be able to apply on the base chain. And so we're really excited about that because it means that we are able to get to market quickly, and we don't have to spend a huge amount of capital in the early days developing the code from scratch. But we have the flexibility moving forward where we still have the opportunity to innovate and move things in a direction that we want to go, rather than being permanently tied to what HMX do in the future. We'll have the ability to make those decisions moving forward. So we chose HMX because if you were to go into DeFi Llama, you would see that HMX's revenue is, for the last 7 days, it's almost $900,000, and they have a TVL of about $27 million. And if you compare that to GMX, they've got a revenue of about 1.7 million, so twice as much revenue, but their TVL is over 500 million. So they've got 20 times the amount of TVL. So we really like the strategy that HMX have gone with, which is essentially keep the fees as low as possible for traders. That's going to attract trading volume on the platform. The more volume that you can get through the platform, the more fees the protocol generates, the higher the APRs that the liquidity providers receive, and it creates this virtuous cycle where the LP providers are happy and it's an attractive investment because you're getting this passive income. At the same time as that LP, the depth of the LP is providing the liquidity that's required for more volume for the traders. So it's this, really nice virtuous cycle that the ecosystem flows with. So that's why we've chosen to partner with HMX. And it also means that we're able to offer this seed round opportunity to everyday investors. So this isn't just exclusively for whales. We've got a $100 minimum in our seed round, and that just doesn't really happen in the space. And Bill, our CEO, is very much a supporter of the ethos of having a community-driven project and trying to keep the distribution of capital as fair as possible within the ecosystem.
Oh, that's awesome. Yeah, that's definitely a huge thing. Like you're saying, just $100 to get involved is such a small, step that's needed, opposed to a lot of different private sales and stuff like that where they require much more. I won't jump through all of the slides here. I'll kind of fast forward a little bit. Can you tell me more about the seed round and what's going on with this prior launch before Flex is up and running?
Yeah, I mean, this is where the real opportunity is right here and now. So we've just opened up the seed round just a few days ago, and the seed round is you deposit on USDT on Aerodrome, and depending on how much you deposit, there's a minimum $100. You'll be allocated a certain number of FDX tokens when we have our official launch. And we expect that to be roughly in about 2 months' time, 2 to 3 months' time, I expect. We're going to go into testnet in within the next week or 2 weeks, where the platform will go live for people to be able to test. But the seed round investment, so the way that it works is we've got a total supply of 5 million FDX tokens. We're allocating 7% of that to seed round investors. So there's a total of 350,000 FDX tokens are being allocated to the seed round investors. And then depending on your deposit in USDT, you will get a proportional share of those FDX tokens. And the way that works is there's a 6-month cliff. So they're locked as LFDX for 6 months, and then they will be gradually vested out to you on a monthly basis for 18 months thereafter. So in month 7, you'll have 1/18th liquid FDX, and you'll have 17/18ths that are still staked as LFDX, if you follow what I mean by that. And then each month, that's progressively, you're going to get more FDX that's unlocked for you. But what I really want to emphasize, because this is important, I think it's missed a few people along the way with the pitch deck, is that while your tokens are locked, they're earning. You're earning USDC, you're earning revenue. And in actual fact, HMX, the protocol that we are partnering with, the seed round investors in that protocol ROI'd, they got their money back through the yield alone before the vesting period was even finished. And the tokens that they held on to are 14x what they were worth when they started in the seed round. So there's a huge opportunity here for, you know, everyday investors with a minimum $100 to get into, you know, the early stages of a project where there's much less risk than there might normally be with a seed round, because we're using we're leveraging the technology from an existing platform, a battle tested platform. So there's less risk there from that perspective. The chances are you're going to get your return on investment before you even have all your tokens back liquid. And the tokens that you decide to hold on to, well, we would hope have a significant amount of price appreciation in them as well.
Yeah, man, you're getting my mouth watering over here. You know, what I really like about the project is that it already has a product market fit. It's not just a new sort of, you know, DeFi primitive kind of project or some other, you know, meme token launch that has no real utility, right? This is a project, like you mentioned, with working technology, already has, you know, something that people look for in crypto, which is leverage trading and being an LP for those traders. And with all that being on top of, right, it being launched on base chain, which doesn't have as much competition right now. So all of these kind of, you know, ingredients thrown into the pot, along with we're just post Bitcoin halving, right? In the next kind of 6 to 12 months, we could see the market really picking up. So really establishing a foothold, you know, as one of the number one leading highest volume, lowest fees trading platforms, I think is a really strong narrative and a strong reason to, you know, keep looking into Flex. So I'm really liking what I'm hearing.
Yeah, we're really excited. I mean, I think that there's people are always going to want to trade. It's just in certain people's nature, and trading platforms traditionally do very, very well. And by investing in the seed round, you're essentially you're sharing in the income that the platform makes. And to give you some perspective here, 97% of leverage trading still happens on centralized exchanges.
Wow, I did not know that.
And so we see that there's a huge amount of growth opportunity for people who want to move into a more decentralized solution.
Nice. Hey, Zach, there's a flow chart somewhere. Can you go back to that? I want to, that one right there. Can you kind of walk us through this? Like, let's say after the seed round, our tokens start getting unlocked. What can we do with our FTX? Do we match it with ETH or something, base ETH, and then
so
or can we just stake it naked on the protocol itself?
So a couple of both really good questions. The answers aren't on this slide here, but I can talk you through it. So essentially, unless am I okay to share my screen? Am I able to share my screen? Because I do have a diagram that shows that. I just need to reactivate my mouse.
I'll stop sharing mine.
Do you have that button, Stu, or do I have to do something?
Yeah, just give me 2 seconds.
Okay. I'm like, this is kind of AG's realm of the things he does. I'm trying to fill in, and this stuff's all new to me. I got you.
That coming up okay?
Yep.
Okay, so this diagram I put together here to help explain exactly, you know, what you can do with your tokens. So when you invest in the seed round, you get this locked FTX, which we can see in this first circle here. Then that's gradually vested out to you as FDX. Okay, your options at that stage are you can either just hold on to it as FDX and, you know, wait for the price of FDX to increase and sell for a profit, or you can sell it immediately, or you can convert it to this escrowed version of FDX, and that's a feature that's going to be exclusively available to seed round investors. So you can convert it to ESFDX. That's going to allow you to stake it.
For us American, is that escrowed? Is that the word you're
escrowed,
saying?
Yeah.
Okay, I just
escrowed.
Okay.
Yeah, my Scottish accent's not doing me any justice here.
Well, I think it's the Americans that end up butchering everything. I was just making sure what you're saying and what I was hearing was the same word. So
yeah, so the escrowed FDX can be staked, and therefore you can continue to earn platform revenue. Or your second option is to pair it up with ETH, and then you can either choose to stake that on Aerodrome Finance and earn Aero rewards that will be incentivizing through bribes, or you can stake it in our platform as this staked FDX LP, in which case you will receive a portion of platform revenue. So you've got a few different options as to what you can do with that FDX token when it gets released to you after the seed round investment.
Nice. Awesome. What's your oh, we lost him.
Come back, Stu. Come back.
Oh no. Let's text him.
So what are your call? Gosh.
I didn't. I would never do that. I didn't even touch anything. I think when he cleared his screen, I think he dropped off. Maybe he'll come back. What are your thoughts so far, Zach, while we're waiting for him to pop back in?
I mean, I really like it. It's like he's mentioning, what's really cool is since the project hasn't launched yet, right, you're really getting in the ground floor of a project that has utility and is a proven system with HMX's technology. One thing he mentioned about, majority of, hey, welcome back. One thing he was mentioning about, the 97% of leverage trading happening on centralized exchanges. I can vouch for myself. I have a MEXC account, and I recently logged on to find out, hey, we need KYC, we need all this information from you, we need your passport, we need your driver's license, we need your tax returns, and that just made me say, oh, I'm done with this, never going back there again. And so I think that's going to continue to be a trend, especially certain countries where more KYC crackdown is coming down. So it's really exciting to see these, DeFi projects that are accessible anywhere in the world. Now you'll have an opportunity to use those. So I think that's also another very promising move, because, like I said, that 97%, I can see that shifting to lower and lower on centralized exchanges and increase higher and higher when it comes to DeFi. And something like, you mentioned GMX, right? I've used them a few times, right? Really love their platform, and same thing, their staking has always been very high. And so it's, and that's only a few years old. So, right, when these projects get adoption and get known as being the lowest fees, highest yield, things like these things, right, that sticks around and will have that staying power. So overall, I'm seeing a lot of bullish signs when it comes to this project. Yeah.
I would echo all of that, Zach. I've logged on to a few centralized exchanges recently, and they're literally all demanding KYC. And there's lots of people that just aren't interested in going down that route, and so decentralized options might be a better, the decentralized solution might be a better option for some people. And I think that there's going to be more and more people coming into this space, and we feel certainly that the base chain is a pretty good bet in terms of where we're going to launch. And we have the flexibility that we can move on to other chains in the future if we want to. But right now, base is where the momentum is. I think it's important that we move quickly, and because there's not an awful lot of competition in terms of derivatives exchange is on the base chain at the moment. The platforms that are on there are small. They don't have a huge amount of TVL or market cap, and so now's the time to strike. And so we're going to really be moving as quickly as possible to get through the testnet stage, make sure that there are no major red flags in the code that we've got, and our developers are going through the code line by line at the moment, and they've been really, really impressed with the quality of the code that has been given to us as part of this partnership from HMX. And I guess, also just to let you know a little bit about the team, the Flex team. So Bill, who I've mentioned, is our CEO, and he's been in crypto for 6 or 7 years now, but also has a long history of running and operating successful businesses both on and off chain. He has an existing protocol that's been running now for the last 14 months, which I'm invested in, and I have been since day one, and that's been a really solid investment. It's closed to new investment at the moment because it's focused on real world assets, and so the scalability isn't there just to keep bringing in more and more TVL. But it's been a great investment for me, and he and the head developer that we've got have known each other for over 16 years, and Bill and the dev work together to build the back end software for a very popular streaming service that I'm sure you will all know. I can't share the name because of a non-disclosure, but it's just to give you a bit of background on who the CEO is. Then you've got myself, and you guys are familiar with me from the Elephant Money community, and I've got quite a bit of experience now in DeFi. I've been in the space for the last 3 years, and I've got an operational background in the real world, and coming in to apply that here in the DeFi space. Mike Dre's on the team, so you'll also know Mike from the Elephant community. He is our tokenomics guru, and he is in charge of investment strategy for the overall Flex Labs company. And then we've got a team of 3 full-time developers, and we've got a designer who's focused on artwork and marketing. So nice. Team of 7 people.
So you guys are forking. Sorry, Zach. You guys are forking from HMX. How is that? Are they just getting tokens, or are they, do they get revenue share every month? How does that kind of?
So they get an allocation of the team tokens. Goes to HMX, and they get some of the revenue as well as part of that partnership, because it's a partnership. I like to describe it as a partnership rather than a fork, because we're not just going there and using or stealing their code. We're doing this together.
I was thinking it's more like a franchise, right? That's
If you were to compare it to like a real world business model, it's kind of like a franchise. Yeah.
Circling back to McDonald's, right?
That's right. Yeah. I was going to say, can you share my screen one more time, Chris?
Yep.
I just wanted to show, here is the Twitter for Flex Perpetuals. I know you guys got some kind of contest going on. Do you want to talk about that or some other?
Yeah. So we've obviously we're just getting started. We're just building momentum, and we're looking to grow our presence on X and Telegram and YouTube, and through partnership with people like yourselves and other influencers. And we're doing some giveaways at the moment on our X account. So I mentioned that Bill's a trader. And what he's basically doing is he's taking trades at the moment, and he's just giving out a portion of his profits that he makes from his trades, which is brilliant.
It's so smart.
Last week we gave $1,500 away over a couple of days. Once we finish on this call, I'm about to draw the winners from today. That's another $500 that's getting sent out. And it's a no-brainer, really. All you have to do is pop your wallet in the comments and follow us, and you've got a chance to win $100.
Nice.
Pretty sweet. That's pretty good ROI, if you ask me. Just leave a comment and have a good shot at making some nice, sweet USDT.
Yeah, and from a marketing perspective, it seems to be gaining momentum. Our following on X is up 50%. In fact, I haven't looked at it in the last couple of hours, but it was up 50% in 6 hours today.
Wow.
So it's really beginning to gain momentum.
That's awesome. And so anybody that wants to invest in the seed round, they are going to need a referral code, correct? So
yeah, absolutely. So, and they can use your guys' referral to do that. They'll need USDT on Aerodrome, to invest in the seed round, and it's simply a case of, it's really straightforward. You just connect your wallet, you deposit your however much you want to put in, minimum $100, and you'll see an allocation of what we call FIP2 tokens, and that's just for us to track, essentially, for the accounting purposes, so that we know how much of the FDX token to allocate to you once we fully launch.
Nice. So 100's the minimum. What's the maximum allocation?
There's no maximum. I mean, we're looking for 1.5 million. So I don't know how deep your pockets are, Zach. But if the
maximum you can put in, Zach, is $1.25 million, because that will top them at their 1.5. So that's your max.
Let me get my buddies at McDonald's. We'll all throw our money in a hat together, and we'll see if we can get the rest of that.
Also, just on that seed round as well. So anyone that does deposit into the seed round can then share their own link, and they can earn a 3% referral fee for anyone that deposits using their link. And that referral fee is just paid straight to their wallet as USDT. And that's something that's kind of coming out of our marketing budget as a means to promote this referral.
Hey, Stu, I meant to ask, does that get paid to their seed round wallet or to their actual wallet? Does that make sense?
It'll get paid to their seed round wallet. So the same wallet that they invested the seed tokens with.
Yeah, okay. That's actually what I was hoping. But when you just said it, I was like, oh crap, does that go to my normal wallet? That's not where I want that money to go. I want it to go to the seed round money. Okay. That's good. And that's actually paid by your marketing department. That's not coming out of like my deposit. So like when I use the referral link and I deposit, that doesn't pay my uplink, if you want to call it that, right? It's
not a tax. It's not a tax. We're footing the bill for that, essentially.
Nice.
Pretty sweet.
Well, cool, man.
That's all my questions I had. Yeah, this sounds like a really promising project, and I love, like you mentioned, it's community owned and run, and it's having a awesome opportunity to get in on the ground floor. So definitely something I'm interested in.
Absolutely. Do you have any more comments, questions, concerns, Stu, for us?
Me? No. I mean, I think that we've gone through quite a lot, over the course of the last hour. There's a lot to discuss in the protocol, but it may seem complex, and that's the difficulty with some of these, is to try and distill it down into a simple pitch, if you like. And that's something that I'm still refining and working on, how to try and share this information with the community. But the easy button is, deposit into the seed round, and you're going to get a share of revenue for those tokens. Then you're going to get those tokens released out to you gradually over time. And if the platform does as what we hope it's going to do, then those tokens are going to be worth an awful lot more in the future, once they're liquid for you, than they are now.
Love it. That's simple enough. I like it.
That's really why AG didn't join. He couldn't get through the white paper. He just used work as an excuse, I think.
Awesome. Like it. No, thanks very much for having us.
Yeah, we appreciate it, Stu.
I hope to have you on again soon, maybe after launch or something like that. That would be awesome.
Yeah, that'd be great. Anytime, yes. and maybe one of these days I'll be able to join you for a game of poker.
Hey, that's what. That's the problem, is because we do it during our live show. Anybody in Europe really kind of gets screwed because it's so late for you guys, or early. I don't know which way you want to.
It's super early.
Yeah, so it's just one or the other.
1 o'clock my time in the morning.
But if you guys liked what you heard and you do want to invest, you can reach out to Zach. He'll have his referral code, or you can reach out to me or AG, and R2R will have our referral code.
Yeah, so we can put it in the description as well. So check the description.
Yeah. So, and if you have any questions, just reach out. We can reach out to Stu, or we can get you in touch with Stu directly. So,
all right, it's been real. Thank you, Crypto Stu. Can't wait till next time.
Appreciate it.
Thanks, guys. Speak to you soon.
Let's go FDX. Woo!
Woo! Mm.